Hello, and welcome back to 5 Minutes Smart. Today, we are looking at the end of an era. May 2026 marks a massive transition for the United States economy. Alice, what is happening at the Federal Reserve?
Thanks, Liam. We are officially entering the post-Powell era. The leadership transition at the Fed is happening at exactly the moment when the central bank is facing its toughest challenges in decades.
Right? Powell has steered the ship through a pandemic and the initial inflation spike. What is the new leadership inheriting?
They are inheriting a structural nightmare. We have sticky, persistent inflation, a slowing labor market, and a staggering $40 trillion national debt. The new leadership cannot simply rely on the old playbook of printing money or aggressive rate cuts.
So, if the old playbook is out, what is the new normal? Are we stuck with higher for longer interest rates indefinitely?
It looks that way. The incoming board members, regardless of who specifically takes the chair, understand that cutting rates too quickly could reignite inflation, especially with geopolitical tensions keeping energy prices high. The market is realizing that the era of near-zero interest rates was an anomaly, not the baseline.
This sounds like a structural shift in how Wall Street needs to operate. You cannot just borrow cheap money to fuel growth anymore.
Exactly. Capital is expensive again. Companies actually have to prove their profitability and manage their debt loads. For the average investor, it means reevaluating risk. The cost of carrying that $40 trillion national debt is also exploding, which puts even more pressure on the Fed to maintain credibility.
All right, before we wrap up, Alice, what is today's smart-sounding sentence that our listeners can use to sound like macro experts?
Here it is. The transition to a post-Powell Federal Reserve signals a permanent structural shift toward higher terminal rates, as central bankers are forced to prioritize long-term fiscal credibility over short-term market liquidity.
The transition to a post-Powell Federal Reserve signals a permanent structural shift toward higher terminal rates, as central bankers are forced to prioritize long-term fiscal credibility over short-term market liquidity. Excellent.
It perfectly summarizes why this transition is not just political, but a fundamental change in the rules of the economic game.
Fantastic insights as always, Alice. And to our listeners, thank you for tuning in to 5 Minutes Smart. If you found this breakdown helpful, please hit that subscribe button. It really helps the channel grow. And if you want to support us directly, you can buy us a coffee using the Ko-fi link in the description. We will see you tomorrow.